What's up, guys? Welcome back to my channel. In this video, I'm going to talk about risk management and psychology. So, in the journey of Forex trading, or Forex trading in general, there are some things that are very, very necessary for us to pay attention to. Over times, many people don't pay attention to risk management or psychology. Many are interested in strategies, analysis, signals, and all. But out of the three criteria or three skills you need to become a profitable trader, number one is technical analysis. And that is the part of what technical know-how, your ability to understand the market, your ability to analyze the market, your ability to predict probable bias or probable direction of the market to take trading decision. This fall under technical analysis. Then we also have another one, which is known as psychology. Psychology has to do with your emotions, how you behave towards trade in general. Then the last one is risk management. So my emphasis today is just to lay foundation on psychology and risk management. Thereafter, or probably in my upcoming videos, I am going to break it down to a very simpler level, such that anybody can practically understand and introduce you to tools which I myself personally use to ensure I am able to manage my risks to a great extent, and then how I am able to deal with my psychology or how I behave towards my trade. So if you are new to this channel, make sure you subscribe to it and turn on the notification bell, hit the like button, and share this video for more content. All right. So there is a link to our Telegram channel where we share some of our setup. So if you have not joined that link, I think you will want to be there. Like I said, if you're a Forex trader, when I mean Forex trader, I'm talking about currency pair or a synthetic trader like derivative markets or whichever trading platform you're doing. The Telegram channel is for you guys. All right. It's for you guys. I share some of my setup. Like I said, I trade both the currency pair as well as the synthetic pair. So if you have not done that, make sure you join the Telegram channel and don't forget to subscribe. Okay. So before I continue what I have to tell you, though, I have some running trade. This is on step index. Oh, okay. This is just one that that is the beauty of Forex trading. This is weekend. The Forex market is closed. So I have to focus on what the currency pair is closed. So I have to focus on synthetic, which is opened 24 hours. So I have this trade. I was able to pick it from after this rejection candle, and you can see that this is about how many risks to reward. Oh, this is 1:4 risks to reward ratio. You see, it's a good trade. So we are anticipating TP very soon. So it's fine. So, and I have already marked out some of the setup I'm looking at for the week to take on this is GBP USD. This is good. This is good. I wish I'm able to spot this entry from last week Friday, but nevertheless, I'm expecting if there is a retracement to this entry, this point, I'm going to ride on if at all there's no retracement and the market break this zone and retest it, I'll take that position. So that is that about that. So this is on US 30. I'm still running some analysis which I have not completed. So once I am done, some of this setup is going to be dropped in the Telegram channel. So make sure you join the Telegram channel if you're new to it. So let's dive into what we have for today. Now I'm talking about I'll start with psychology. All right. I'll start with trading psychology. Okay. Psychology of trading. When we talk about psychology in trading, We are talking about your emotions, how you behave towards your trade. As simple as this concept is, this is one of the most important tools that many traders lack. For you to be profitable, I've mentioned 3 skills you need: your technical skill, psychology, and what risk management. Out of these 3, the most important aspect is psychology and risk management. Psychology and risk management cover 90% of these trades. All right. So ensure you pay close attention to whatever I have to say today. It is very, very important and paramount that you have to understand what psychology is. Psychology is so important that 2 people might enter the same trade with the same equity or account size, same lot size, and all. Some will be able to make more profit than the other. The reason is not because of anything. The reason is because of what? Psychology. All right. Psychology is very important. Psychology is the tool that will make you profitable in the market. So it's important you understand your own personal psychology. And one funny thing about it is you can't learn it alone by reading a book. It's something that you have to gain, or you have to learn with experience. So how will you be able to learn psychology? How will you be able to have good psychology? Number one, you have to trade. That is the first thing. You have to trade, because by trading you gain experience. Like, trading is practice. Trading is not like a normal school that we went to. We learn physics, chemistry, and some other concepts, and then we go into the exam hall, they ask us questions, we are able to decode and then provide answer. And no, your ability your ability to call yourself a profitable trader is the result you can show. And one of those things that prompts good results in the market is what? Trading psychology. So make sure you understand this concept. It's very, very important. Like I said, psychology deals with how you behave towards your trade. So it's important that you, as a person, you pay attention to your behavior. Okay. Just like I said, this video is just to introduce you into the concept of psychology and risk management. I'm going to dive into them in details in our next video. So make sure you subscribe to this channel and don't forget to turn on the notification bar so that whenever I drop the video or any important content, you will be notified. All right. So let's move on. Like I've said, I've laid some emphasis about psychology. I've told you that it's this with how you behave towards your trade. There are some people that whenever they enter a trade, once they see their trade running in loss, they start panicking. It's normal, all right? When you're trading, especially when you're trading a live account and you see that you're in drawdown or see that red, there's the way you feel when you're seeing that red. That is psychology. That is how your reactions towards that trade. It is very important, and you have to be in control of your emotions, because once your psychology is messed up in the market, believe me sincerely, you are going to have a bad trading day or weeks or months, depending on how fast you are able to overcome the effect of that psychology that was messed up by a trade. So it's important that you pay attention to how you behave towards your trade. Some of the things that will ensure good psychology, some of the things that will ensure that your psychology is intact, is your ability to know some basic concepts, like what? Understanding of risk to reward ratio. If you have not watched my video on how to, how to understand risk to reward ratio in the forex market, please make sure you do that. Okay. Yes, you have to understand risk to reward ratio. When you understand risk to reward ratio, you'll be able to control your emotions, because it's more like you setting a target that, okay, when I leave my house today, I'm going to the office. All right. Irrespective of the traffic you might meet on the way, you already have a target of where you're going, which is what? Your office. So you will be able to endure and exercise that patience enough for you to get to your office, even though there is traffic on the way. The same is applicable to the forex trading. When you are on a running trade, if the trade is in loss, you have a target. Yeah, I'm sorry, if the trade is running in loss, it's more or less you wanting to go to your office, and then you see that there is you encounter some challenges on the road, which is now what's something like traffic or a motor breakdown or something. So these are limitations, right? So you have to see that, but by all means, you have to get to the office. All right. So what's when you understand some basic concept like that, you'll be able to know how to control your emotions. You'll be able to know how to hold yourself back, not to be too attached to a particular trade that you are in. So that is that about that. It's also important. The second thing you need to pay attention to is you have to understand how the forex market works. Okay, when you understand how the forex market work, you will be able to use that information to control your psychology. Because you once your emotion is messed up, believe me sincerely, any trade within that particular confinement, within that particular period of time that you are taking, is honestly going to be a mess. Okay, because lack of psychology is so bad that whenever you are in a trade or whenever you take losses in the markets, you will find out that after taking 2 losses and you want to trade more, the losses will keep on coming up. Why? It's because your psychology has been messed up. So once you are in loss, have it at the back of your mind that, oh, I'm having psychological issue at the moment. Then the question is, how do you tackle it? Some of the steps you need to take to tackle a messed up psychology. I'm going to do another video on that anyway, but just to say a few things. Number one, you have to know yourself. Okay? I'm Onoski. I know myself. I know how an incident will affect me. For instance, if I see a trade I'm going to take, I know that if this trade hit my stop loss, I'm going to feel bad. There's no point of me taking such trade, because these are things that seems not to be very important, but they are the most important concept in trading, and many people don't pay attention to it. When you go online and you search YouTube, you see what people are talking about is trading strategies to make 1 million, strategies to make $1,000 strategy. That's just all what people are saying. But then profitable traders, even if they don't tell you, the truth of it is there's no profitable trader that will not understand his or herself very well. To be profitable, you have to understand yourself. And to understand yourself means that you understand the principle of trading psychology. That's that about that. Then risk management. What is risk management? Your ability to minimize your losses and maximize your profit. That is my own definition of risk management, because the whole essence of trading is to make profit. You have to minimize your losses and then maximize your winning potential. Remember the word I use, minimize. In Forex, the bitter truth about Forex trading is that you can never run away from losses. No matter what the strategy you're using, no matter how good your psychology is, you cannot run away with from losses. So the best you can do is to minimize it to the best minimal you can. But by all means, make sure that you maximize your profits. What are the importance of risk management? Risk management, there is a trader, before I proceed, there is a trader, I've forgotten his name, that said that he paid more attention to what he will lose in the market than what he will gain. So when you are trading and all you see is you are concerned about is the profit you want to take, the profit you want to take, the profit you want to take, believe me sincerely, you are not paying attention to risk management and your psychology. You are not paying attention to it. Because by doing that, you're only seeing the winning part of it. You are not thinking, you are not being rational in your decision making. Because as a trader, you need to think twice. What if it doesn't go in my favor? How will I react to it? If you're able to answer that question, that is when you should take the next move. Not always you see a trade, oh, this trade is going to sell. But then you never ask yourself, where will I put my stop loss? Where is my take profits? Is there chances of this trade reversing? What will I lose if I don't take this trade? What if this trade hit my stop loss? What is my account size? Why should I take this trade? So these are questions you need to ask yourself before you make trading decisions. So like I said, I just want to give you an overview of what psychology and risk management is. I am going to talk more or lay emphasis on how you can manage your psychology and how you can manage your risk as well. So risk management, we tell you, okay, this is your account size. This lot size is suitable for your account size. You need to target so pips. You have to trade between now and this period and stop trading. So it's all of these things that you have to put in place. It is risk management that will tell you that my trading strategy is this. If I do not see this thing in the market, I am not taking any entry. So risk management will help you filter some of the problems that beginners face in trading, which is FOMO, the fear of missing out, because it's common to many beginners. You see a trade and all they want to do, they want to be on the chart, they want to click buy, they want to click sell. So at the end of the day, they get messed up and it becomes a challenge to them. They don't last in the market because after so many losing trades, they get frustrated and all. Another thing I normally advise people is get a mentor, right? Get a mentor. A mentor will be able to see the journey of Forex is a lonely path. Okay. So when you are in Forex and you are alone, it will be very difficult for you because trust me, there are times where the market is going to frustrate you. You need someone that you are going to lay your hands on or rest your head on his or her shoulder once the market starts messing you up. Just why it's important to get a mentor. A mentor will now help you to put you on track, try to teach you or try to give you what you need to be able to manage your risk and helps to control your emotions, put you in the right psychology that you need to be for you to trade. In my next video, I am going to lay emphasis or teach you how you can be able to calculate your risk effectively, or how you can be able to manage your risks. Some of the tools I use, some of the risk calculator that I'm using myself that have helped me both in synthetic and in currency pair. So I hope this video is helpful. If it is, please give me a thumb up and then make sure if you are new, subscribe to it and turn on the notification bar. Don't forget to also join us on our Telegram channel where we share some of our setup. Like I said, some of the setup I'm looking out to take, I'm going to drop some of them in the group. So take care, guys. No skid case. See you in our next video.